Welcome to The Explainer. All right, today we're diving into a really fascinating shift that's happening down in Australia. There are these huge economic pressures that are quietly fueling a powerful Bitcoin revolution, and honestly, it could have some massive global implications. So, this observation? It comes from someone right on the front lines of the Australian market. It just captures this incredible undercurrent, and it really forces you to ask the question, what is actually going on down under? You know, for the longest time, we all kind of thought of crypto as a young person's game, right? A bit of a speculative bet. But that's changing. We are seeing a fundamental shift in who is buying Bitcoin and, even more importantly, why they're buying it. And get this. This is not the demographic you'd typically associate with cutting-edge digital assets. Not at all. And they're not just trying to make a quick buck. A lot of them are coming in and saying, I want to use Bitcoin as a savings account, a way to actually protect their wealth. So why is this happening all of a sudden? Well, the reasons really get to the heart of the matter. People are just feeling squeezed. They've done everything right. They follow the traditional playbook, get an education, pay your mortgage, but they feel like they're still falling behind. This isn't about speculation anymore. For so many, it's about pure financial survival. Okay, so what happens when everyday people start looking for these kinds of alternatives? Well, they're running smack into a wall. The established financial system, let's just say, is not taking this lying down. And this just creates this massive conflict. On one side, you have this bottom-up, grassroots movement of people trying to take back control of their own money. And on the other side, you have the traditional institutions using their power to basically block the exits, a lot of the time saying it's for protection. It's a classic battle, really, between decentralization and control. And you have to understand, this isn't just an inconvenience for a few people. It has huge national consequences. When your regulatory environment becomes this hostile, what happens? Innovators, capital, they leave. And that stifles growth and risks pushing the entire country to the back of the line in a huge new technological race. But here's the crazy thing about this pressure cooker environment. It has this unexpected side effect. It is forcing innovation. To get around all these challenges, people are discovering that Bitcoin can be a whole lot more than just a store of value. It's actually evolving into an incredibly powerful financial tool. People are starting to realize that Bitcoin isn't just some abstract idea. It has these unique technical properties that make it insanely valuable as a financial instrument. And the term you keep hearing over and over is pristine collateral. And here's why it's considered pristine. For a lender, this is a dream come true. Think about it. If someone defaults on a loan, the lender can instantly liquidate the exact amount they need, anytime, day or night, anywhere in the world, without asking anyone for permission. This unique quality is exactly why we're starting to see things like Bitcoin-backed mortgages pop up in Australia, and it's completely changing Bitcoin's role in the economy. Okay, let's zoom out for a second, because what's happening in Australia, well, it's really just a microcosm of a much, much larger global trend. The entire structure of the Bitcoin market is literally changing right before our eyes. I mean, what a perfect metaphor. It just captures this feeling of immense coiled-up pressure in the market. There's this sense that even when the price is moving sideways, something huge is building up just beneath the surface. You can feel it. And if you want proof, here it is. Recently, a single wallet from the really early days of Bitcoin sold $9 billion worth onto the open market. Now, in any previous cycle, a sale that big would have caused an absolute crash. This time, the price dipped a tiny 3.5%, and the market just ate it up. That tells you there is a profound new level of maturity and demand out there. So what's the reason for this newfound stability? Well, it's because the market structure has fundamentally changed. It's not just dominated by retail investors driven by euphoria and fear anymore. The big money, the ETFs, the corporations, the institutions, they are here now, and their structured, systematic buying completely changes the game. It suggests those wild boom and bust cycles of the past, they might just be over. So what's the final piece of this whole puzzle? Well, it comes from the most predictable players of all, governments and their central banks. I mean, it's the oldest play in the government playbook, right? When you're drowning in debt, you have one move: turn the money printers back on. So, as central banks like the US Fed start signaling they're getting ready to cut interest rates, the smart money's already moving. They know all that cheap capital has to flow somewhere, and it's going to seek out hard, scarce assets. They're getting in position before the inevitable melt-up. Now, check this out. This is a fascinating bit of accounting sorcery. The US government officially values the gold on its books at about $45 an ounce. The real market price? It's over $3,000. So with just the stroke of a pen, they could revalue that asset, massively strengthening their balance sheet, and maybe, just maybe, use that new value to acquire other hard assets, like Bitcoin.
And it's not just governments thinking this way. We're also seeing the rise of what are being called Bitcoin treasury companies. This is where major corporations start treating Bitcoin not as a gamble, but as a core treasury reserve asset. Basically, a better, harder form of cash to protect themselves against inflation. Many see this corporate adoption as the next giant leap on the road to global acceptance.
And that's really the thought we want to leave you with. This whole thing started as a story about everyday Australians just trying to get ahead, but it has completely ballooned into a question about the future of sovereign and corporate wealth on a global scale. In this new race for a secure financial future, the cost of being last could be absolutely immense.